I'm Greg Hunter. Welcome to USA Watchdog.com. With us, the great geopolitical and financial cycle expert, Charles Nenner of the Charles Nenner Research Center. Charles Nenner, thank you for joining us today from Amsterdam. Great to have you on.
Nice to be back.
Well, good to have you back. It just seems really chaotic with the markets going up and down, hundreds of points. I mean, you had yesterday, to Monday, you had a spread of 300 points in a day, up and down. Today, we're up and down, mostly down. I don't know. I mean, it's just the markets look absolutely bizarro and chaotic. You like to say, and this is a famous quote: "Life is lived forward, but understood backwards," which to a guy that's you're not looking a day or two out. You're looking a year out or 6 months out. You're looking out a ways. What's going on in the market? Should we even care about these big wild swings in the markets?
Well, first of all, you have to look in percentages. 100 points, 200 points seems a lot when you're at 10,000, but now we're over here, so it's maybe 1%. So I don't agree that they're wild swings. They're very normal swings. And if you understand the mathematics of the market, I mean, everything is totally the way it has to be. And I always stress to people, instead of watching the media who come up with stories, why don't you buy a book and try to educate yourself, and then you understand why the market goes up and down and how much it goes up and down. So everything is under control. Everything is going the way it has to go.
You don't foresee any big market crash in the near term. You're thinking it's going to hold pretty steady. A lot of people are thinking we're going to have a big reset in the financial markets, and we're going to get a dollar gets slammed, but that the dollar looks strong, and you're not calling for a reset, at least at this point, correct?
Well, it's always emotional interpretation of the people at the top. When I said the cycle tops by the end of 2017. Everybody was so positive, and now everybody's negative, and we turn around, and it's always the same story. So when we, for half a year, we have pinpointing about this week's have a major low in the dollar, and now everybody was very negative in the dollar. Even if you look at the numbers, there are agencies who know who can pick up the data of the investors, how much percentage is bullish and bearish, and you see always at the extreme, the whole thing turns around. Now, so our work is that it doesn't work. It doesn't work that it turns around in a vacuum. You know exactly when it's going to turn around. It's just, and I always repeat that, it's that the world is based on we have free will, and nobody can predict something because I have my free will. And I say I'm not so sure about the free will, and especially if hundreds of millions of people are investing, they equalize each other out, and there's no free will. So the only thing you have to know is what their so-called no free will is, and plot it out, and then you know exactly what's going to happen.
What's going to happen with the dollar? Is the dollar going to get stronger? It looks like it has.
Yeah, the dollar cycle bottomed, and the euro cycle topped, and now the whole thing is turning around. Now, you can explain it, but that's not my work. One of the explanations is that the difference in interest rate short-term between the euro and the dollar is the biggest difference in 30 years. So that could be a normal reason for the euro to be weaker than the dollar. But that actually is not the reason, because we pinpointed that cycle low and we didn't know why the dollar is going up. It just has to go up because the time is there.
And what about the gold market? You're not really bullish on gold, at least near term. Long term, I think you are, but I think near term you're not.
Correct.
What about
Correct.
gold?
All the time we said after the summer the bull market should start, and we expected to pinpoint exactly when it's a good buy, but it's too early right now.
So you're long term on gold. Why? Long term bullish on gold. Why?
Well, you always ask me why, and I just try to talk with everybody in what people understand is. I would say I still think there's no inflation. I think we're going to get a crisis, and people don't know what to invest in, and so they're going to buy gold.
Fair enough. And what do you think going on? You wrote about the Chicago murder rate. You wrote about how they describe Syria. Is it a war or an intervention? And basically you wrote about, you were touching on, you talked about this in the pre-interview too, about how people are psychologically programmed by how the media puts out words and how the media frames stories. Is it a war? Is it an intervention in Syria? What's going on with what we're seeing in North Korea, Syria, and the Chicago murder rate?
Well, I gave a couple of examples. I says, for instance, you can talk about illegal immigrants, or you can talk about aliens that not have their papers yet, and it sounds much nicer. You can talk about Syria is a military intervention or there's a war. And I gave it as an example because another example is that if you watch the financial media, you hear the whole time, well, there's going to be some inflation and interest rates are going higher. Which stock are the best to buy right now? And we never hear which stock should we sell. So they set up for the small investor a situation in his mind that buy, buy, buy. And if they would say the whole day sell, 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 people would think maybe I should take profit and sell. And the people should realize that they're not thinking independently because they're bombarded by all these people who have interest in it. Now, the people who have interest in it to keep everything going are the people who make money out of the whole system. So I wrote about it that if my work that predicts all the financial markets without talking all the nonsense around it would be accepted, then a lot of people in the financial business will be out of work. So they find it unacceptable because they make a lot of money. Brokers make a lot of money. They don't know anything. And they just talk nonsense all the time. Or not nonsense, they think they say something. The whole day I hear that this stock is going up because there's a takeover, this, that. So do people really think that the big investors didn't know what's going on? If you watch television, oh, now you're going to buy because CNBC talks about a certain stock. It's just a hopeless situation, and I feel sorry for people who invest their money. I mean, now I had a nice ride, but soon the whole thing is going to tumbling down, and they just listen to all these things, and they have no clue how to invest. So I always say, why don't you follow us, learn how to do it. We're not going to charge you in the beginning, just to see what is possible. Has nothing to do with what they tell you.
Well, and you talk about, let's talk about that. You just touched on the whole thing is going to come tumbling down. What do you mean by the whole thing is going to come tumbling down?
Well, let's take a couple of things. First of all, I think soon or right now, this expansion is the longest in the financial history. Now, to say that it will continue is the same thing as not agreeing with me when I say if you go back 100 years, every year that ends with a 7 is the market crash, because that's what happens. Or to say if unemployment, made a big deal out of it, if unemployment is 4%, economy is strong, is good for the market. When I showed that every time unemployment is 4%, you have a market crash. So now you got this situation. This is the longest expansion ever. So what, you think it's going to be even longer? So what are you playing with? You're just gambling with nonsense. So it's over. Then you have the inflation story. Now the inflation story is brought about by people who don't do the historical homework, who remember for the last 30 years there was always inflation. So they continue to talk about inflation, and I prove that most of the financial history shows that deflation is the norm. But they don't study the economic history. All they remember is inflation. So they continue to talk about inflation, and already for 2 years, maybe remember they talk about inflation. There's still no inflation. The inflation in Europe is like 1.3. I published, you see a B chart, and I say, soon copper is going down and crude is going down, and we have a deflation problem, not an inflation problem. Now, in order to know if you have to invest in bonds or not, you really have to know that. But if you listen to people who don't check history and just think, well, probably it's time for inflation, you're not going to make a nice living. So I feel very sorry, and I wish that I could do something and challenge all the people, where do you get your facts from? Because I always show, if I say something, how I calculated it. But I have no competition because people just throw out there something and nobody says how it gets to it.
You said that the bond market is going to take off, which means rates are going to go down. Now we had this little pop up in interest rates, and it's so funny. I was watching people on TV, money managers, and they're saying, and they asked the questions on Bloomberg, and 3 money managers, one Asian woman and 2 other guys, and they said 3% 10-year Treasury. Are you a buyer or a seller? And they went buy, buy, buy. So evidently they think the same thing you do, that this is just a short-term little pop up, and rates on the 10-year are going lower. Am I wrong?
No, they say buy, buy, buy because they say 3% is maybe a psychological point that it will not go above 3%. But why don't you ask them why they buy? I'm sure they don't have an answer.
Well, what would you do? Would you be a buyer, or you're the number 4 person on
Well,
the
I
chart?
don't know if you watch. We even have a daily Twitter situation. We already up 2.5 points from the low one. We covered our shorts. The long bond was around 141. Now it's almost 144. So we already covered the shorts. We went short at 173 when nobody was listening that they should sell. I wrote about it. I remember years ago when the 10-year was 4%. I says buy, just lock yourself in at 4%. Nobody wanted to do it. When the 10-year was 1.5%, I begged people also in your program. I said at least go out of bond funds, because if the bond funds go down, you don't get back your capital. If you own the bonds, you can wait. You couldn't get them out of it.
So where do you think bond prices? Where do you think interest rates are going? Are they going down?
The interest rates are going down.
Interest rates are going down. Now you called that. So you think that? So hold on, let me get back in with you. So you said that the bond price. So in other words, we're not going to have any real big inflation. The economy is going to get into trouble.
Well, you say we're not going to have big inflation. I think we could have deflation.
Okay.
Yeah, no, but this is again what I mean about if you say we're going to not have a lot of inflation, people listen to that and say, oh, not going to have inflation. Maybe they should prepare themselves what to do if there's deflation, because once there's deflation and they lose a lot of money, then all the pundits says, oh, there was deflation. And the Fed, who also doesn't seem to have the right models, still think, why don't we, if you listen to their conferences, why don't we have inflation? We cannot get inflation at 2%. Well, because cycle is such that whatever you do, you cannot get inflation.
You had said that if you're not positioned for what's coming, and you said this about, I don't know, 6 or 8 months ago, and it seems like everything is kind of bouncing along, right, where it is. Like you said, it's not, a couple of hundred points up and down. It's not a lot of percentage-wise in the market when you're at 24, 25,000 in Dow. But,
well, the stock market was down 15%, and the bond market was down 18%. That is serious business.
Do you still think, is your long-term goal, that the market is going to basically, you say it's over, you say that the cycle, the second longest cycle, I think it's the second longest in history, not by much though, but second longest cycle in history, almost heading for the longest up cycle in history in bond market, a positive bull market, I should say, or a bull cycle. And you say we're going to have a sled ride all the way down into the year 2020 where stocks are going much lower. Is that right?
Correct.
Tell me about that. Explain that.
I can't explain it. The cycle topped. The cycle is down until 2021.
How bad will it be?
Very bad.
Explain.
Very bad.
Explain how bad is very bad.
I called for Dow Jones 5,000. I still call for Dow Jones 5,000.
You think it'll go down that far? Is that because of the cycles? Is that because the cycles, Dow Jones 5,000? Is that because the charts just show you that it's going to go down that low? Oh my gosh, it's going to be a bloodbath.
Well, it's going to be a bloodbath, but what I say is last time in the 90s when the Dow was 5,000, the world still looked okay.
Should people just what would you go? What would you tell people to go if the Dow is at 5,000 in the year 2020? Where would they invest? Would they invest in just cash?
Just cash.
Gold?
I mean, the 2 years gives you a nice rate of return. And maybe use we should have a bounce starting, I think, by the end of the week for 3 weeks or so. Let's see where you get and just take the safe side. But what happens is if we start going up, then all the pundits will come out and say, buy, buy, buy. You see, it was only temporary. And that's how it goes, that nobody sells again.
And you don't see and I'll just go ahead and get in here with you. A lot of people think there's a big giant reset coming because the U.S. has all this debt. We've got this, Dr. Mark Skidmore identified $21 trillion in the DOD and housing and urban development. We got this $20 trillion cash deficit or more. We borrowed more money in the last quarter, I don't know, $480 billion than we've ever borrowed in any quarter since the 2008 recession. Do you foresee in your cycle work a big currency reset, a big debt reset coming?
Well, I tell you, the last time there was really this situation was when Roosevelt was there. And Roosevelt, it was very interesting. They paid off only 25% on the dollar. because the inflation that came. Now the problem is if inflation, you still owe the whole money. So that's why they need urgently this inflation. So the value of the money goes down and you have to pay off less, but there's no inflation. So it is a big problem. But, they can keep this going forever and forever. They can keep it going for a very long time. I don't think it's a problem. I mean, countries can just print money as long as they want.
So you don't see a big debt reset coming anytime soon. You don't see the dollar tanking. You don't see a new currency. You don't see any big debt reset in your work.
No, I see the dollar becoming strong again.
And that's just because of the cycle work. So in other words, it'll be so how about the Chinese yuan? I mean, I know everybody thinks that the yuan, the petro yuan is going to displace the dollar, and the dollar will get knocked way down. You don't see any of that either, or do you?
Well, the big artists and the big football players, when the euro was 160, they wanted to be paid in euros. It's always temporary. Nobody's going to, the only liquidity and the only one who can really print money is the United States. It's not going to change.
You would not. So you are dollar positive,
right?
And how does this help Donald Trump? Do you foresee Donald Trump, if the stock market goes down to 5,000, do you think he'll get reelected in the year 2020? Do you think are you positive on that political cycle?
Well, for instance, I feel sorry for him because it's not his fault.
Yeah, that's right. He walked into office with $20 trillion of debt. Go ahead.
It's like Clinton was lucky, the market went up. Also, Reagan was up because the cycle was up. So whatever Reagan did and went wrong, he was just laughing, ha, 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 and nobody cared about it. So that's a problem you have. So, of course, they're going to blame him, but we know that it's nothing to do with him. He can't help it.
Do you think he'll be reelected in the year 2020?
It depends how clever people are. If they continue to talk about this nonsense and not look at what he establishes and when he gets done, he probably will not get elected. But I hope at a certain moment this nonsense will stop and he will concentrate on what he achieved.
You are big on the war cycle. That's one of your big things that you said that World War I and II really was one big war that just had kind of a little space between and a big body count. And you think that the war cycle is going to be even bigger this next time. Can you explain what you're seeing? It looks like they're talking. I mean, of course, the North Koreans have lied many times, but it looks like they're talking about a Nobel Peace Prize for Donald Trump. I don't know if that's going to happen or not. But then on the other side, you're looking at Syria and the attacks in Syria with our missile strike, last month or so. You're also looking at Benjamin Netanyahu basically with a big sign saying Iran lied about their nuclear deal, which I think it's a terrible deal. There's no signatures on it by the Iranians. So it really wasn't a deal. I think it was a giant fraud. How does this all play in with your war cycle, or is what I'm telling you just noise?
Well, first of all, those people who talk about Nobel Prizes, why don't you ask him why Obama got the Nobel Prize? Can you tell me what did he do that he got the Nobel Prize?
It was for what he was going to do in the future, and he got the Nobel Prize, and he started his drone murder program. I think 3,000 people were killed in collateral damage, but nobody talks about that.
He didn't do anything.
Correct.
So we're just talking about total nonsense. It's an illusion what's going on in the world.
So tell me about your war cycle. Tell me what you see.
The war cycle has another 4 or 5 years to go.
Wait. Hold on. So another 4 or 5 years to go before it hits?
Before it's over. So there's a framework that is another 4 or 5 years that it's very dangerous.
So we're in a very dangerous time right now.
Correct. As you see, because they're everywhere, the pockets of problems in the world, almost everywhere. And that's the same thing that a market has all kinds of stocks that start tanking, but the index still holds up. So you see that there is imbalance all over the world and military problems, if it's in Yemen or wherever it is. So a lot is going on until maybe, it takes a total different view. Who knows what happens if they cancel the agreement with Iran and Iran starts doing whatever they want. Anything is possible, but so the danger is still like the danger in the stock market is still 2021. The danger in the war cycle is another 4 years.
And isn't that funny how this Iran canceling the deal? They've said that they'll punish the United States if we back out of it. Merkel, I think, came over to the United States after Macron. He had a big state dinner, everything else. Merkel came over. There's nothing, and it wasn't because he snubbed her. It's because I think it was a last minute panic flight over by the Chancellor of Germany. But isn't that funny how this Iran deal is right in the middle of your war cycle? Do you think that's a coincidence?
We know what's not a coincidence that the Prime Minister Merkel, I don't think she has children. Macron does have children. Rutte, the Prime Minister of Holland, does have children. A lot of these young guys don't have children. They don't care so much about their children. They just want to keep their name. They don't want any trouble right now. They want to be good in history. The same thing at Greenspan and all the other guys. They know the whole thing is going to collapse and the super cycle comes to an end, but not while I'm the president of the Fed. They just keep it going until they're out of office. So they have a lot of intention, not right now. And if the whole thing explodes in 10, 15 years, that's not their problem.
But you're not seeing that. You're seeing the world cycle big now. And you're saying
right.
and you're saying the super cycle is coming to an end now. Please explain.
No, there's a super cycle that is about 250 years old. And let me give you an example. Let's say you have the crash of 29. Actually, it started in 1870, but let's start in 29. You lose all the money, and you start a small business, and you don't trust the bank, so you keep the money under the mattress. And then your son takes over, and your son says, well, let's make a little more, a little more stores and so. But you have to take a loan from the bank, but you don't really like it. So you only do it when you save the money. So at a certain moment, then you gave out equity in the 50s and 60s and 70s. And then they decided, you know what? Let's not give away equity. Let's take bonds. Let's issue bonds. So then they were issuing bonds. Now, the problem is if you give out equity, then you don't go bankruptcy if you don't pay dividend. But if you cannot pay the bonds, you're in trouble. Now, this went up to over the years into the 2000s, almost to this century, when everybody was walking around, don't worry, be happy. Maybe you remember that everybody was wearing the T-shirts. And everybody took loans and loans and loans because nobody was afraid anymore. And that's how we got the crisis in the real estate market. And now, if we have a new depression or recession, we're already stuck with low interest rates. So the whole thing that they continued the economy to hold up, because they didn't want to have depressions, they don't want to have recessions, so they keep it going with all kinds of tricks, and they're out of tricks because we have low interest rates, we have no inflation, the economic expansion comes to an end, and there's nothing they can do if it turns down. So I wrote years ago, this is going to be the end of the super cycle.
And you're talking right now it's going to be the end of the super. 2021, 2020 is the end of the super
cycle.
No,
we already hit the end. We already hit the end of the super cycle. That's why.
Oh, and they're trying to they're trying to continue
populism, it. The people with the middle income, they could have a nice life because they could have loans to take a mortgage, to have a second car. But then, because of this crisis, they couldn't get it from the banks anymore. So they're very unhappy. So they're voting in Europe and the United States for people like Trump and other people. So that's why these people come to power. It all has to do with the fact that people with the middle income didn't get any better income because they couldn't get the loans anymore that they got before. And that's the end of the super cycle. They got it going. They didn't want to be accused of creating a depression. They should have just let the economy go. And even if it broke down, start all over again. But they keep it going with all kinds of tricks. And they run out of tricks.
And you're calling for a depression in the next few years. And at the end of the super cycle, which is now, you're saying that a depression is staring us right in the face.
Right.
And describe what that means to people, a depression staring us in the face.
Well, what it means to people is that the stock market will go down. And the bond market now has a bounce. But if there's illiquidity, even if there's no inflation, and I always give the example of Europe and Greece and Italy, then rates will go up, so you lose all your money in the bond market, and the housing market will come down, and what are you going to do? I don't know which banks are going to survive or not. Look what happens to Deutsche Bank. That's not a single thing, only Deutsche Bank. Underlying, there are a lot of problems in the financial situation. And whoever doesn't have savings, and I'm from Europe, so here in Holland, where I'm sitting, that if they issue bonds, um, then 99% is taken by the Dutch people, but not the United States. So everything is very out of balance, and it's not going to hold up for long.
Tell me about your book that you're writing. I thought this was fascinating. You just blurted this out in the pre-interview, and you gave a title which I love: "God and Financial Markets. God created everything, and why God created the financial laws too." Tell me about the book you're writing, and it's not coming out for a while, but I still find it fascinating. God and the Financial Markets. Tell me about it.
Well, the idea is that if you believe or not, you believe that a certain pattern is in history. So people who believe in God say there's creation. They believe in gravity, they believe in laws of nature, but they think that if million people are involved in financial markets, there's still free choice. Well, there's no free choice. My work proves that, because otherwise, how could we predict when a dollar goes up, how much it goes up, and when it goes down? So it's part of creation. Now, if you think that it doesn't exist, then every day is new. And I always repeat the story. Maybe it's good to explain. When I was at Goldman Sachs, every year we got these PhDs from Harvard, the new people, and I was teaching the class two times a week, because even they don't understand about financial markets. They all have the same textbook, but have no clue. So if I say, we say this and this is going to happen, say, well, what if Obama gets killed or this or that happens? I say, listen, if you say anything can happen, we don't need you over here, because we take somebody for $10 an hour because he can also guess what happens. We take you for a nice bonus because we hope that based on the past, you can predict the future, right? So now if people have to make up their mind, is the past predicting the future or not? Now, if it doesn't predict the future, then don't invest, you have no clue. And if the past predicts the future, then you just need to write models to predict based on the past what's going to happen in the future. And that's what we're doing. So I say it's part of creation. There's no free will in how the world is run. And even if you have a free will yourself, if you're part of the herd of 100 million investors, you don't have free will. So that's why I say God and the financial markets, because things don't move at random. There is underlying theory, and you should know the theory and have the models.
Final question: What what you're spelling out is something pretty awful. I mean, we're looking at a depression, a war cycle, and a depression all at the same time. What would you do to protect yourself? What would you invest in? Would you own your house and your car titles and some farmland, gold, silver? What would you do? What would Charles Nenner do to protect himself?
Well, Charles Nenner bought houses, although it's not his thing. He's more in the financial markets, because even if it goes down, it still will go up after a couple of years.
You got the house.
That after 2022, things turn around again, even if it's very bad. The idea is, how are you going to survive that? And let's hope the bank, whoever, doesn't force you to sell. A lot of people, after the crash that started in 2000, they sold their stocks. And if they should cap them, so that's what I say. What happens is, okay, the market is down 15%, not so terrible. And when it's down 40%, nobody sells, because now it's too late to sell. And when it's down 80%, they take whatever they can. And then we start a whole new cycle up, and they don't have stocks anymore. So you really have to think over how this works. But that's why you have to know cycles. You have to know even a depression or market crash isn't there forever. You just have to know how low it goes and when it's over.
Would you just own your stuff? I mean, you're talking about the banks forcing you to sell. Well, if you own your stuff, then you just got to pay the taxes and insurance. If you own your car, you just got to pay the taxes and the gas. I mean, the repairs. I mean, is one of the ways to survive this is to own your stuff?
I guess so, yeah.
You would say just try to have as little debt as possible.
Yeah. Which is very hard in the United States, because nobody seems to have any extra money stored away. I mean, I have a friend, I went to see him in Miami. I said, "Oh, this is a real great kitchen. How much did it cost?" He says, "I don't know. It's $75 a month." That's the United States.
Don't own anything. I got it. I got you. Own your stuff. I guess that's how we'll end this. I'm looking forward to the book, God and the Financial Markets. I know it's going to be a year. I'm sorry I kind of outed you on this, God and the financial markets, but I believe in God, and I think it's great. I think people are gonna want to buy it based on the title. Charles Nenner Research Center. Charles, thank you for joining us today on USAWatchdog.com. I'll put the links up. Is there any kind of a special offer? You say that you'll give away your research for a couple of weeks or a month or something like that. Is there a trial offer?
Anybody who comes in through you gets it for free for a while.
Okay, well, I'll put it up, and I'll put the USA Watchdog link if you just let me know, or have Jonathan send me a link for that so that people could link to it. I will certainly put it up, and also your Charles Nenner Research Center, your main site, which is some free stuff on there. Charles Nenner, thanks for fascinating. Thanks for coming on and talking with us on USAWatchdog.com.
Okay, we'll see you again.